Morning, everybody. It's 8:38 on this Wednesday, the 13th, and we have some numbers today. So let's get to them. This is your pre-opening comment. It is video number 2280. Okay, so Asia is lower, Europe is a little higher. Because it's Wednesday, we have mortgage apps. They were up 0.5%. That's versus down 10.8% last week. Not really surprising that they would have a little bit of a bounce back, considering they've been down for 4 or 5 weeks in a row. We had CPI came in exactly as expected. The regular CPI 0.2 versus expectations of 0.2, but the year-over-year number 2.6 versus 2.5. So as I've been saying, inflation is not dead, and 2.6 is not overwhelming, but it's a move in the wrong direction. The core inflation came in at 3.3, which is exactly what was expected on the year-over-year basis. The market was down hard, not terribly hard actually. It was down slightly after yesterday's decline. It has turned back up. The Nasdaq, which was down, is now up 42. The Dow, which was down about 100, is up 80, and the S&P, which was down about 10, is up 14 and a half. So the market's reaction is positive. We had a couple of earnings reports, both of them that I saw that are in the news this morning. Monumental gainers. Cava, the Mediterranean casual fast food, trading at 170, up 25. That's up about 15% on blowout earnings. And Rklb, gotta love the name of this one. This is Rklb. Their stock is 1870. That's up almost 4, and that's up almost 30%. They have a new contract for launch dates in the future. The chart on the screen is the bonds, and as you can see, after yesterday's sharp sell-off, they are coming back a little on that CPI data. Remember, we have PPI tomorrow. These were down 1 and 11/32 yesterday. Right now, they're up 21/32. So recovering about half. But if you look at it on the weekly, you'll see that it's still, it may be trying to do something here above this 115.10 low from last week, but the trend is obviously still down. There's a downtrend line here. We've broken all the moving averages, and we've broken the uptrend line. We are still, when you look at this, you can see that we have a period of continued lower highs since the high all the way down. This is the first time we have had higher lows, but again, we've broken that trend. We'd have to break, I think this is 112 and 27, so we'd have to close below 113 in order to break that. The low close in that formation is 113.27, so we've been pretty close to that. In this week's letter, I mentioned that I thought that the gold and the silver both were susceptible to moves to the downside. My number on the gold was 26 to 26.50. Yesterday's low was 25.95. I said ultimately I thought we could get to 25.50, which would be in this area. And it looks like we may. I also said that I thought that we were coming back down to the 10-week moving average. That number is 25.77. Again, yesterday's low 25.95. Same situation in the silver. My ultimate low in the silver, I believe, was around 29.50 to 30. Yesterday's low was 30.28, and we had a bounce back. Right now, we are down only 40 cents after being down almost $1.25. We've now pulled back from the high of 35 to a low of almost 30. That's pretty substantial. Um, you know, this is an area of great support, even though we did go through the 10-week, the 5-week, the 20-week. The 5-week has turned down, but, we've seen that before in these consolidations. In any event, last on the Dow, up 110, last on the S&P, up 1826, and last in the NASDAQ, high of the day, up 62. Have a good one.